what does hiring a manager, a professional do that is different from someone just checking their portfolios weekly, monthly, something like that?
Well, I think there's a lot that plays into that, and it's not just the managing or rebalancing of the portfolios, or not just putting your cash flows and measuring your net worth and looking at different variables and projections, but I think a lot of it is behavioral as well. And you'll hear us frequently say that people make terrible decisions when they're emotional, and what do people get most emotional about? Their money, right? And so typically people, when they get emotional about their money, they make terrible decisions. And it's nice to have someone there to bounce ideas off of, to see if you're really making a good, logical decision and thinking with a clear head as you're making those decisions. And so I think that's a lot of what advisors bring to the table.
So you do have a large portfolio of clients. When you come across someone who has managed their own portfolio for a certain amount of time, what's one of the main mistakes or areas of improvement that you notice right away?
Brandon, do you want to chime in on this one?
Yeah, I was gonna say,
He's like, I'm ready.
usually it's rate of return, right? Like you look at it, and the management of the funds it just wasn't right. And what happens, and it's interesting because I'll oftentimes ask people, so how do you choose it? Not trying to pin them down and say what were you thinking, but just curious. And some, I mean, it's the answers I get, you would be astounded by, right? People, well, I don't know, I just kind of selected all of them and split it between, or they will. One I heard a guy just looked at all the past performance from the prior year and said whichever ones did the best, he took those top 2 or 3 and put it all in that. The problem with that is why did it do well, right? Did it just essentially, we all know that in investing we want to buy low and sell high. Well, if you're looking for all the ones that have just run and gone high and you buy all those, you're doing literally the exact opposite of what you should be doing. And so we kind of came up with these topics because we get this a lot. And like Rick said, anybody can manage their own portfolio. It just, do you have the time? Do you have the competency? And if you do it, are you going to stay within that realm, right? Within that price range of if you had just paid someone to do it anyway. And so we wanted to go through these questions and really answer each of them. The first 4, if you can answer yes to the first 4, then I think you've got a pretty good shot, of managing your portfolio. If you come back and you say no to even one of them, it really probably would be in your best interest not to try and manage it yourself, just because the stakes are so high. What happens when you manage it poorly is dramatic. I mean, we can lose hundreds of thousands of dollars if we do this wrong. Or
maybe millions. Yeah. So the questions, the 4 questions, like you said. Okay, so number 1, do I have the passion and consistency to maintain an investment portfolio? So passion is arguable, but what do you mean by consistency?
Yeah, you can't just this, and we get clients that will get into stock or trading, right? And sometimes right when they retire, they have nothing else to do, so they're like, hey, I'm gonna really get into this and start doing a lot of research. And there's nothing wrong with that. Sometimes it's good mental stimulation with a real purpose to actually research and choose and pick stocks. But most times those clients will just carve out a piece, right? And then they'll run those decisions by us so we can make sure they're doing the right thing and not getting too out on any far edge. But for the most part, right, if this turns into just a short-term hobby that you do for 3 months and then you forget and time goes by and you haven't looked at your portfolio for 6 months, a year, 2, 3, 4 years, well, then all of a sudden, we may have missed some significant opportunities. And so when we say, do we have the passion and consistency to maintain a portfolio, it needs to be more than just a fad for you, right? It needs to be, hey, I'm going to be dedicated in consistently researching these things, right? We might buy this stock or this ETF today, but 6 months from now, that might be the wrong decision, or that waiting, that the amount we own might be the wrong decision. And so are you going to be consistent in monitoring and making sure that all your decisions are where you want them?
Okay, so what's the difference between using a financial planner to manage a portfolio and someone who wants to just, play in the market and trade stocks, do some day trades and stuff like that?
I think a lot of it outcome and how we're building the portfolio, right? When you say day trade and pick stocks, I think that's fun, and I think a lot of clients enjoy doing that. But the last thing you'd want to do is take your entire life savings and your retirement and place it on a bet, right? And so when people come to us, most times, like Rex said, they're not interested in us like giving them day trading advice or the hottest stock to buy, right? They're interested in getting consistent, reliable returns and doing the best thing they can with their money, right? Making your portfolio as efficiently as possible to accomplish goals like retirement, vacations, things like that. And so when we manage money for clients, we'll sit down with them, figure out what their risk tolerance is, right? How much can we allow this portfolio to move in return for growth, right? And help them kind of put those two things together.
Rex, what's consistency over time mean to you as far as building a portfolio and managing it?
So consistency over time to me means somebody that's going to spend time regularly on a regular basis, whether that's daily, weekly, or monthly, certainly not longer than that, in analyzing their investments, looking at what they own and why they own it, and making sure that it's still in alignment with their overall risk profile. And I think being able to do that month after month after month after month is the consistency component of that. What we find a lot of times is somebody, again, will get extremely passionate about it for very short windows of time. They'll get passionate about it for a month or two, and then all of a sudden they'll get distracted with life, with family, with work, with a hobby, with a side hustle, with something. And then all of a sudden it sits there dormant for 6 months, a year, 5 years, for some amount of time. And then they look up again, and then they get passionate about it again for another 2 months. And then that cycle continues. That's not consistency. And so, at least not in my mind. It's consistently inconsistent, I guess, if you want to put it that way. And so I think that's what we're talking about. I do think that there's a distinction between, you reference financial planners, and I know it's a terminology issue, but not everybody that does financial planning is a portfolio manager and manages portfolios. Brandon and I are accredited portfolio manager advisors, meaning that we manage money as part of our business. And so I think that when you're looking at different financial advisors and you're looking at different, people that are working on your planning, things along those lines, that you ensure that they're qualified to do the job that you're hiring them to do. And so you don't want to go, to, somebody selling auto insurance to get your car repaired necessarily, if that's a good example. So